Hello, everybody. If you are one of those people who are following the Scandinavian financial markets, and particular if you're one of the people following the Swedish financial media, you would get the impression these days that the Swedish economy is about to collapse, that something awful is happening in the country. At least that is the impression you get if you look at the commentary from Swedish analysts about the developments in the Swedish krona. The Swedish krona, as you all know, is freely floating, and recently it has been freely falling. The Swedish krona has been weakening somewhat in recent days. The weakening seems to have accelerated somewhat. That had led a number of Swedish bank economists and others to come out and decry this and really seem to give kind of rhetoric that resembles something of Sweden being in a major crisis. However, you look at macroeconomic numbers in Sweden, that's not the case. The Swedish economy is healthy. It's very strong public finances, large current account surplus, huge foreign FX reserves, a very healthy, strong economy that has come through the global crisis of 2008 and 9 extremely well. And the Swedish economy has in general been performing very well. And in my view, the floating Swedish krona is a large reason for this. So what is happening to the Swedish krona, and why shouldn't we be too worried about it? Rather, why should we in fact welcome the fact that the Swedish krona is weakening at the moment? Well, first of all, if you look at our view of the Swedish krona, then over the past year, we have in fact argued that the Swedish krona should be strengthening. Or rather, we started arguing this back in November of 2016, where we argued that monetary policy in Sweden had become too easy, and at the same time, the Swedish krona had become too strong or too weak. So what have happened since then? Well, first of all, the Swedish krona initially strengthened, which in itself caused monetary conditions to tighten. Secondly, we have seen particularly money supply growth slow down, another factor causing a tightening of monetary conditions. So if you look at these two things, both things contributed to a tightening of monetary condition from a too easy starting point, so to speak. And if we look at our monetary indicator for Sweden, which is composed of money supply growth, nominal demand growth, the Swedish krona, and interest rates, that is very close to zero at the moment, indicating that Swedish monetary conditions is neutral, or rather is calibrated in such a way that the Swedish Riksbank, the Central Bank of Sweden, will hit its 2% inflation target in the medium term. Inflation is quite close to 2% at the moment. We actually see some weakening going forward, a slight drop in inflation in the coming months in Sweden, but then we should see inflation remain or return to around 2% in the medium term, maybe slightly above that. But from a monetary perspective, monetary policy is more or less perfectly calibrated. And one of the reasons that Swedish monetary policy is well calibrated, has been so for large periods in the past decade, is that the Riksbank is a relatively credible central bank. So when a negative shock hits the Swedish economy, when inflation moves below the 2% inflation target or inflation expectations, the market starts to price in that the Riksbank will move in a more easy direction, and consequently the krona weakens and do a lot of the lifting for the Riksbank. So the Riksbank essentially just have to sit around and be credible and let the market do the lifting. So what is happening now is exactly the market is doing some of the lifting from the Riksbank. As I said, the Swedish economy is relatively strong. We have seen real GDP growth in excess of 2% over the past year. But if you look at it, there are some signs of softening of growth. First of all, if you look at confidence indicators, PMIs, for example, or consumer confidence, in the last 2 months, they have somewhat fallen off a cliff. They had clearly shown something moving in the negative direction for the Swedish economy, both on the export side and on the domestic side. Furthermore, we're seeing some cooling of the Swedish property market, which otherwise have been doing quite well. The cooling, to a very large extent, is a result of rather draconian regulation being put in place vis-a-vis the Swedish property markets over the last 1.5 years. Regulation which I think is very misguided, but nonetheless it has been put in place, and we're now seeing somewhat of a cooling on the Swedish property market, and that of course is hitting the domestic side of the Swedish economy. So what do you need? You need to have something offsetting that shock, and what is offsetting that shock is a weaker krona. Obviously, a lot of people would say, yeah, well, if we look at the export numbers, this is not really helping exports. We can't export us out of this crisis. Well, a weaker Swedish krona is really not about improving exports. A weaker Swedish krona is allowing for a domestic-driven response to other negative shocks. It's about ensuring that money velocity does not decline and inflation expectations does not decline. The weakening of the krona in that sense reflects that demand for krona is declining relative to the supply of krona. And from a monetary perspective, what is that? That is an increase in money velocity. Hence, we are stimulating domestic demand by having a weaker krona. Or rather, the weaker krona is just a reflection of the fact of declining money demand relative to the money supply. So in that sense, you shouldn't see this as an export gain. It's not really about that. And to illustrate that, we can look at Denmark and Sweden in the aftermath of the 2008 shock. Denmark having a pegged exchange rate to the euro, Sweden having a floating exchange rate. Initially, both economies was hit very hard by the 2008 shock. But in Denmark, the Danish central bank had to hike interest rates and intervene heavily in the market to ensure that the Danish krona did not deviate from the peg against the euro. That consequently led to a very significant slowdown in domestic demand, a contraction in the money supply and the money base, and a collapse in the Danish property market. And that took very long time to get out of that crisis. In fact, we haven't until recently started to emerge really from that crisis. It's only been in the last 2-3 years that the Danish economy again has started to pick up. It was a long drawn out crisis, exactly because we in Denmark have a pegged exchange rate that did not allow for the Danish central bank to ease monetary conditions. In Sweden, however, the Swedish Riksbank were able to move swiftly to cut rates and allow the Swedish krona to weaken very significantly. Consequently, the Swedish economy recovered very fast in 2009 and 10. And what did happen then? The Swedish krona recovered then following the recovery in the Swedish economy. So what is that telling us right now? Well, if we look at the Swedish krona from a fundamental perspective, the Swedish krona really shouldn't be this weak as it is now. Fundamentals are strong. Strong public finances, large current account surplus, huge private savings, particularly large Swedish pension funds. All that is really supporting the Swedish krona. And then the question is, why is it then weak? Well, it's weak because it's reacting to a weakening of both domestic economy, but also because there is some worries about the international economy. Is the Fed tightening so much that this US economy will slow? What will happen to China? And we can see Europe, money supply growth is slowing in Europe. Should we be concerned about slowing in Europe? If all of that is happening, the Swedish krona rightly responds to that. So what I'm saying here is that if there is a slowdown in the US, and if there is a slowdown in Europe, the Swedish krona is already now reacting to it. And that means that the Swedish economy likely will be less hard hit by any slowdown going forward and should begin to recover gradually as the weakening of the Swedish krona and the easing of monetary conditions relative to where we were, let's say, a month ago or 3 months ago, will help support the recovery. So my view is that yes, the Swedish krona is weak. And yes, we should be happy about that, because that ensures that the Swedish economy will not go into recession despite of negative shocks to the economy. So yes, if the Swedish property market is cooling, that does not necessarily have to mean that Sweden will be in a recession. Sweden in the early 90s had very, very bad crisis a crisis that developed into a full-fledged property market crisis, a full-fledged banking crisis, and a full-fledged public finance crisis. And how did Sweden re-emerge from that? By allowing the Swedish krona to go off the peg in 1992 and weaken very dramatically. And since then, the Swedish economy has essentially been doing well. So, dear friends in Sweden, commentators, policymakers, analysts, please, for God's sakes, be happy about your floating exchange rate. Be happy that had you had a pegged exchange rate as in 1992, your property market boom would have been as excessive as it was in the early 1990s. You would have had significant slowdown in the economy now. You would likely be facing some kind of public finance distress. And populist politicians would be doing a lot better. That's not the case now in Sweden. What is the case now in Sweden is that you have a softening of growth. Consumer confidence is easing a little bit. Purchasing manager index is dropped off a little bit. But the weakening of the Swedish krona will stabilize the economy. And the Swedish economy will not go into recession. The Swedish economy, on the other hand, will slow down to trend growth and then stay on trend growth. And as that continues, the Swedish krona will gradually recover as the economy recovers. So would I be happy to buy Swedish krona? Well, surely. If I have a 1-2 year horizon, then I think there is rather significant upside for the Swedish krona. The Swedish krona is probably at least 10% undervalued on a fundamental level, on a PPP basis, and maybe even more. So once the economy starts to recover, and that's not yet, then the economy recovers. So yes, we might take a little bit of a beating now, and the Swedish krona might move down 2 or 5 or even 10% more if the cooling of the property market continues. But in 2 years' time, the Swedish krona will be stronger than it presently is, and the Swedish economy will doing fantastic. Thank you very much, and be happy if you invested in the Swedish krona and in the Swedish markets. The Swedish economy is not dying. The Swedish economy is strong.